Hey everyone, this is Andrew Berman from NMP. Thank you for joining us for another Mortgage Leadership Outlook Broker Edition, sponsored by my good friends over at PennyMac Broker Direct. So I was talking to my friends over at PennyMac, and I said, "Listen, tell us who are some of the top brokers in the country." And on this short list, one of them, none other than Christian Griffin, who is a senior loan officer over at Maverick Mortgage. Christian, thank you so much for joining us today. And you're a beast, so you're doing unbelievable numbers. So this means a lot that you would take actually a half hour out of your day to meet with us.
Thank you. I appreciate it. I appreciate the opportunity and, obviously the recommendation by PennyMac as well.
Well, so listen, I'd ask you, how much of a beast you are, and talk about, your production numbers. But it's interesting. So we just started to talk a little bit before we went live here, and I said, about how many loans did you do in the last 12 months, and what was your response?
Usually, I think from what I've heard, it's a little over 400, but I try not to keep track of it. I just treat every deal as my first and last one, and it adds up over time.
So what keeps you motivated? What is the driving force because Christian, to do 400 loans, in 12 months is phenomenal. So what is the driving force that gets you actually, to do that much volume?
There is a sense of competition in there, but I wouldn't say that's a driving force. Oddly enough, it's probably not the healthiest, but the fear of loss. The fear of something going away, the fear of not being able to provide for my family. We've been there as a family. I've actually been in the industry for a relatively short period of time, I guess. But it's been almost 10 years now. And there was the time when the crash happened and we were one of the people that had to sell our house. And fortunately, we were able to buy another one. But I was working, 3 and 4 jobs at the same time, trying to just keep a roof over our head and food on the table. And one of my daughters was sick at the time. So
wow.
There was a switch inside me that never wants to go back there.
So, what did you do differently this time around that you didn't do last time? What was the difference? What was the Christian 2018 different than the Christian 2008?
I was younger at the time. I had grown into a family business. It is in food sales business. So totally had to reinvent myself. Had an opportunity. I was told that the mortgage industry was, best thing since sliced bread. Figured, gosh, I know a lot of realtors. I know a lot of people. If I'd learned how to do loans, then I should be fine. And it wasn't anything like that. I got my license and I sank real quick. Nobody wanted to talk to me. Nobody wanted to give me an opportunity. But I think it helped that I was given, I definitely know it helped. I was given an opportunity to join a team and learn through trial and error with files that weren't mine and follow a mentor and learn through repetition, which was key. But just eat, sleeping, and drinking that, learning it, going to bed every night, thinking about loans, working 14 to 16 hours a day. So I kind of expedited that learning process. But, that's what I learned. I learned never to let off on the pedal. I think a lot of people that are comfortable doing a couple deals a month, they get their deals and they go on vacation. That's not how I am.
So when did it first hit? When did you go from all right, I'm going to give this a shot, we'll see how this works, to oh my goodness, this is going to be my career. This is where my calling is.
I'd say it took about 1 year to 2 years to really get my groove and be comfortable with it. It felt like felt like forever because I had 3 young daughters, very young daughters at the time, and my wife. So we were definitely living paycheck to paycheck and, skimping on a lot of stuff to get there. But once that 2-year mark happened and I had built some relationships through performance, it was nice. But there was still that fear. It was not the volume I have now. And even though I have volume now, I think I still have that same fear I did back then because, having 40 to 50 deals in a pipe still feels like having the 4 and 5 deals in the pipe.
So you had to get your family to buy into this. So you have
Oh, yeah.
this dream of actually starting a new career. You have the audacity to just say, "Hey, the world is collapsing. I'm going to get into the business that is being blamed for the world collapsing." And I mean, like, what? This is like 2013 that you got in.
Yeah. Yep.
2013. So the dust is starting to settle. And you say, I'm going to get actually into the mortgage business. Now, what did you do how did you get your wife to buy into this?
We didn't have any options. I mean, thankfully I had her support. I mean, she knew. She's like, whatever time you need, you've got it. I'll hold the fort down. And I'm not going to lie, it's tough on the relationship. I honestly, I don't know the statistic, but I have heard that the divorce rate with loan officers is pretty high. We're still going strong. I mean, everything in life takes time and work and effort, but she gave me that time to hone in my skills. And to this day, it still takes a lot out of a personal relationship with my wife and my kids, because there's really no off hours. I mean, my kids do know that if we're in my truck and my phone rings, Dad needs to take the call and everybody needs to be quiet, right? The dogs haven't quite learned that rule yet. So there's the occasional explanation as to why there's a dog barking in the background, but the kids definitely know the scowl when somebody's on the phone.
I know exactly what you're talking about. Hey.
Yep, exactly.
That's great. All right, so let's talk about these how do you find the business? So here you are, actually, you're well into your career, almost actually 2 years away from hitting a decade, doing 400 loans a year. How do you find the business to you these days?
It's one of those things where it's kind of grows over time, obviously. So been in it for a while now, but I think it grows organically. I'm fortunate to work with Redfin brokerage, and it's more of a soft sell. Like, they know that I'm there to take care of their clients, and the performance is consistent. Go above and beyond to take care of my clientele, meet or exceed expectations at all times. Never over-promising, under-delivering. I mean, there are times that things go sideways that are unknown, and making the best of it. So I literally, in my heart, when I'm doing a transaction, I'm treating a client as if it were me. And that was one of the factors that got me intrigued as to becoming a loan officer, is that I had a terrible experience when I was buying a house. And I didn't know a lender. I didn't know a realtor. And I think I'm probably I'm like the lower 1% that didn't know any of those people, because it seems like everybody knows a lender nowadays, or a realtor. But so I just Googled like best realtor San Diego, and got this individual that definitely didn't have my best interest at heart. And then the lender at the time also royally messed up, and I was just told that I'll get taken care of when he does a refi for me. And the fact that I fell for that is a little embarrassing. But that being said, that's how I think of myself. I see my eyes and my clients when I'm taking care of them. I'm like, okay, well, that's something I'd be comfortable with, and it seems to all work out in the end.
Yeah, I mean, no, they were the best. They were just the best at SEO, not at actually being the best real estate agent, not
Right.
the best being in mortgages. So, oh my goodness. So you had this pain, and from this pain, experiencing this pain, you said, I can do this, and I could probably do this better. So, what would you say are things that are different about your process, than most originators' process? Because listen, let's call a spade a spade. 400 transactions is phenomenal. I believe in putting aside 2020 and 2021. If you're doing over 100 transactions, that's kind of rarefied air. You have something unique and different about your process. So, what is different about doing business with Christian Griffin that other loan originators don't have?
I mean, I think it's a multitude of small things, right, that equate to the end result. Proactivity is huge. I mean, making sure that your files are thoroughly pre-approved. It's really easy to get a pre-approval letter together and just send them out. And, gosh, I'm sorry, I missed the fact that, I didn't review their taxes correctly, or I missed something on credit, or I missed the fact that, it's a VA purchase and the complex isn't an approved complex. There's all these little fine details that, that you're also almost educating the clients and the realtors at times to prevent a catastrophic, result. So those small things add up. But I mean, I think if there's like a secret sauce, it's literally, I honestly think it's that I actually care about the clients. I mean, I know sounds silly, but I mean, I hate to say this, and that's kind of the curse of this industry, but at least for me, is that I care. I always tell my clients, I'm like, I actually care about you. It's a blessing for you, but it's a curse to me, because I'm the one, if things are going sideways at 12 o'clock at night, I'm laying there, my brain, my wheels are spinning, like, how are we gonna fix this? Or what do we need to do to get this thing back on track? Or what are our options? And not only that, but, I think, conversation or communication is key. And being open and being able to tell clients the hard stuff and the agents the hard stuff, and keeping everybody on the same page, because you care. Like,
yeah,
get the people that shy away from those hard conversations, or they're afraid to tell their clients that you don't qualify for this. Because sometimes clients will try and control things, but you need to keep them in the safety zone, right? Because there was a situation in the very early parts of my career where I was learning, like on that team I was talking about, and never forget, the buyer's agent was livid with me because the clients relayed that I got them all excited that they qualified for this program. And it was one of those situations where it was, I can't remember, I think it was a conventional loan, and there was something with their employment and a special circumstance. It was like under discretion that they'd even be able to, move forward. And turns out it was not even close. Like, I shouldn't have even gotten them that far in the process, but it was like good intent. I was like, hey, we'll try it, right? That's how it was, at least my memory presented, that we were going to try this. But they took it that it was a done deal. Like, they're fine. And we're in contract, deal died. And everybody was mad.
All the moving truck.
Yeah, exactly. And it was like, I was the bad guy, but the intentions were pure. So you've got to have both. You've got to have the pure intentions, but you've also got to make sure clients are understanding that, hey, this is a risk. Here's a very realistic potential outcome. Do not get excited. And I have that conversation quite often on save deals. It's like, hey, we have this problem with this other lender. I'm like, do not get excited right now. Like, I love the fact that I'm getting the opportunity to take care of you, but do not get excited until I get you your keys. And at that point, we can all be excited, but I don't want to ever overpromise, because that one instance was a killer for me. It killed my soul, because I actually cared about those people, and everybody ended up hating me at the end of it.
Yeah. I mean, honestly, it sounds depressing dealing with you. But it sounds like it's like the best possible scenario. So you're going to be paranoid, because you're going to be scared, actually, that you're not going to be able to do what you want to do, because you care about your borrower so much. And like, you're going to take it personally, like, all right, I guess I'm going to do 401. All right, I'll do this. And you're going to actually tell them the bad news fast. You're not going to give them actually, any of actually that, they're just coddling them and telling them actually what you think they might want to hear. But in the end, actually, doing business with someone like you is a predictable outcome. That's probably why you get so much business from real estate agents. And, so if you look at your book of business of the 400 loans, and I know a lot of them come from the big agency that you work with, what percentage of your business overall comes from real estate agents? Approximately. No one's going to.
I mean, I'd say 80%. I mean, it's all referral based from realtors, and then you get the occasional referral from the clients. I mean, there's so much. I mean, my business, I'm a lean machine. I mean, I don't have huge operations, and really, I'm the point of contact throughout all my transactions. So I always claim, I don't want all the business.
Right. I'm sorry. You're the
Sure.
point of contact for 400 transactions.
All of them.
Okay.
Yeah, I do not have a team of other loan officers that are handling my files. So I have a junior that helps some internal intake for applications, but every file I am the main point of contact. I'm the one that's talking to them in the beginning. I'm the one that's pre-approving them. I'm the one that's getting them the contract. I'm the one that's closing them.
That's amazing. Everyone, I mean, give a clap to this guy, because that is so. So you're saying actually that all 400 transactions. So you're meeting with a borrower, you're pre-qualifying.
Yep.
You've been to take us through actually, the life of a loan in the world of Christian. Please tell. So you have someone actually says, someone from your one of the brokers you work with says, here, someone they've never bought a house before. Can you help them? And what happens to that person from that point? Take me through the close. So
I'll get a phone call or a text on the weekend. That's typically when a lot of the leads come, and they're like, hey, we need to tour a house, or we need to get pre-approved. Wondering if you could help. So within, I'd say a minute of that, obviously the speed is key in that situation, because if you don't answer, then you've got 3 people below you, right? So introduction, call them up, say, hey, be happy to assist. Mind if I ask you a few questions? That way we can kind of get a better idea of what we're dealing with. It's funny. My wife has this terminology called a drunkalog. So sometimes you get clients that want to go ahead and they'll just tell you their whole life story. So you've really got, as an experienced loan officer, kind of figure out what's important out of that conversation and redirect, right? Because sometimes these conversations can go for like 45 minutes long. But finding out the important stuff that's going to actually matter for getting financing. Then narrowing down what's needed for a pre-approval, getting that email sent out, and getting them in the process of getting application, reviewing credit, reviewing income and debts and all that. Once all that's done, depending on the necessity for a turn time, usually it's relatively quick. Just being accessible to do that. So that's the tough part, about being a one-man band at times, right? Because you need to pretty much be glued to a computer at all times. But getting that pre-approval taken care of. And then I think the big key is having a conversation with the clients and making sure they understand what they're getting ready to sign up for another 30 years, right? Going over monthly payments, going over closing costs, answering a lot of questions. Turn times are key, especially in this competitive market. So educating's like, that's a huge part in the beginning process, is educating, because if you don't do that and you get your offer accepted and you're a week and a half into this and the clients are like, whoa, we had no clue. Our monthly payment was $3,000 a month. We're expecting $1,500. We're only paying $1,500 a month for rent. Then you just did all that work for nothing, or you got a really pissed off client.
Yeah. All right. So I mean, and are you handling processing? Are you going to closings? I mean, you can't go to 400.
I've got a processor. So we get, we get an offer accepted. Then I've got, clientele or, intake people that are registering the loans. I'm collecting updated documents at that time. So if a month's gone by, we're getting updated pay stubs and bank statements. Disclosures go out. I'm going over the loan estimate with the client. Again, going over numbers, because that's key, educating, making sure that they know what they're getting into, that they're comfortable with it. They know what's going to change. So those are all very basic things to build a solid foundation, because if you don't do that, as you get to the end, again, you don't want to do all this work and expense of the clients to find out that they're not comfortable. I tell people all the time, I'm like, I would rather not do your loan and have you be either uncomfortable or mad at me. So the goal is to get all that stuff out the front, because if you're not comfortable in the beginning, I'd rather you cancel or make a decision at that point versus 3-4 weeks into it.
Wow. So I want to go back to something you said about education. So talk to us a little bit about education. Like when you say education, define exactly what is a part of your educational process. Is this like a scripted thing that you say to every borrower? Is it just isolated to the mortgage, or are you going beyond and talk about overall finances?
I don't go too deep into finances. I mean, I'll get instances where clients ask about like tax advice and stuff like that. And I'm not an expert in that. I mean, I'm not even an expert for myself in that department. But as far as education, I actually got my degree in teaching a long time ago, so I really try and incorporate that. I like giving people information, you know, like rules, like normal education on a loan, but also like my opinion through my own experiences, so that they can kind of see both and help make better decisions for themselves. But yeah, educating people, I always say, hey, here's your options, right? I also have an opinion. Here's my opinion. And then I give them that information so that they can make the best decision for them and their families, right? Like, for instance, here's a common one. It's not scripted, but it's just a common thing. Like, a lot of people will be like, their goal is to put 20% down on a conventional loan. They don't want mortgage insurance. Okay. It's just, they don't know why they don't want mortgage insurance, but they just know that they should put 20% down. I'm like, okay, well, number one, I do see how much money you have, and 20% down, you're going to be eating top ramen for like the next 6 months. So if you were to put 15% down, you're going to, and this is all hypothetical, but you'll have $30 a month for mortgage insurance. They're like, what? Well, that's not what I'm seeing online. And I'm like, well, it's because it's not accurate, right? So $30 a month for mortgage insurance, but you're keeping back, who knows, 20 grand, 30 grand, whatever it is. And they're like, oh, well, in that case, then yeah, maybe let's do 15% down. So that's one scenario. Another one might be, yeah, we're putting 20% down. And I'm like, okay, what kind of property are we looking at? And like, it turns out to be a condominium. And I'll be like, well, just to give you an option, because, you may not know this, is that if you put 25% down, and sometimes it depends on what kind of clientele I have. I'll dig deeper. I'll tell them like LLPAs and whatnot. But it's like, you put 25% down, your interest rate gets a little bit better. I'll give you the options. So you can do whatever you want, but here's the differences. And they're like, oh, okay, well, I got that 5% just burning a hole in my pocket. I'm not going to miss it. So then, yeah, put 25% down. They just didn't know any different. So that kind of education, right? Trying to think of other things like turn times. I do have a template email I'll send people with a bunch of like bullet points of things to do and not do. Like in those, it's not scripted, but it's more built into my routine of having conversations of what to do and don't do this kind of stuff. But no matter what you tell people, some of it's going to stick and some doesn't. So, but at least I can say I did it.
What is your turn times that you're promising?
21 days is pretty much the max. A lot of times it's less. And yeah, one thing, like, that's why PennyMac has been such a, staple in my ability to be successful. Like, they're one of the few banks that's able to do that, on top of having, the handheld boutique feel. Like, they actually cater to, I believe, their loan officers, and there's a direct person that you can deal with. And there are certain exceptions, that they can try and accommodate turn times, or if things pop up on a normal loan, to help accommodate to make their loan officers successful and look good for the clients and the agents. So that's one of the huge, honestly, and it's not just saying it because, they're sponsoring this, but they're one of the reasons. Yeah, they're one of the reasons that I was able to hit those 400, right? That's part of the secret sauce. It's not just one thing. We're all a team.
Yeah, it's and the team is only going to be as good as its weakest link. So absolutely. No, that's awesome, man. I love that, man. So, I really have to say this. I love your process. I love actually everything you've shared. Obviously, I think knowing that you have a great wholesale lender like PennyMac. Because you can only work as hard as you can, but if you're passing it off to a wholesale lender that's dropping the ball, you're not going to make it to the end zone.
Exactly.
Yep. Yeah. So now, what about the mortgage broker model? Do you love? Because I know you weren't always a mortgage broker, right. But like, what about it do you love that has you committed to being a mortgage broker to serve your borrowers?
I love the versatility. As a broker, you've got some accountability that's easily held because there's competition. You see everything, on a spreadsheet pretty much, and you can see who's hungry for business. It was a process figuring out, I had always had to be cautious, right? Remember that whole thing where I go to bed every night and just rock myself to sleep, crying in pain and misery. So I had to be very cautious. I had to be cautious in who I was going to entrust to take care of my clients' financing, right?
Yeah.
I'll give the analogy to clients when they ask, what's the difference between a broker and a direct lender, right? Because I've been all. So I'm like, well, the difference is I have a lot more options, and I'm essentially the same as a direct lender, whichever bank we decide to go with, because I'm just putting on the hat of that bank. I essentially work for that bank that we're pushing the loan through. And, the beauty of being a broker is that, hey, if you are not going to perform as needed, then I have other options, so it's like you get taken care of. You actually have banks that are hungry for your business and willing to appease what's needed to turn on that floodgate. And, PennyMac gets a lot of my business because of that.
Yep. Oh, it's fantastic. And I love it. It's listen, I believe, that when you're working as a broker, you have that options. You could at any point actually tell them they're fired. And they know that they're paranoid too. They're like, oh my goodness, what do we need to do to keep actually Christian and the other Christians in this world happy? And some have figured it out. Others are struggling. So I'm glad you've partnered and we partnered with one of the ones that figured it out. So Christian, I appreciate this. Now, so listen, here we are. We actually have seen the loan officer count in the last 2 years just skyrocket. There's just going through the roof. Obviously, your business has not been impacted by this, but any bit of advice for either the newbies that are possibly watching this or the seasoned professionals that have hired new originators to handle actually new business? Any bit of advice?
I think, I don't know if I mentioned it earlier, but the whole philosophy of eat, sleep, and drink loans, you have to really be in that mentality. You can't be a part-time lender and continue to grow in this industry. There's just too much competition. So if you want to succeed, and it's not going to be something that happens overnight, but you literally have to be available on your phone. I think honesty is key. People ask a million questions, and I always say I'm never going to know everything. So don't ever lie. Tell people that I'm sorry, I don't know. Guidelines change daily, right? So there's times when you're going to hear, oh, this lender can do that, and it's like, oh, okay, well, let me look into it, and I'll confirm or deny it. But simple thing: eat, sleep, and drink loans. You wake up, you're thinking loans. Going to bed, it's not healthy, you're thinking loans.
No, so listen. Last week, the broker we had on, he just talked about actually how he's an expert in guidelines. He knows guidelines. And that's how his company's doing unbelievable business because he eats, sleeps, breathes, does everything around actually the lending business, and because of that, he has become an expert. So, man, I really, Christian, thank you again for taking your time. Again, like I'm sure actually why this is going on. Your phone's going off the hook. Your inbox is filling up with inquiries. Docs coming back. But I sincerely appreciate you taking the time to join us today.
Absolutely, it was my pleasure, and you're a great guy, and thank you for being nice.
Thank you. And thank you. Yep, there you go. There it is. Eat, sleep, and drink loans. Yes. All right. Thank you, Jared, just sharing that with us. Eat, sleep. Jared Eying. Hopefully I'm pronouncing your last name. I appreciate that, Jared. Appreciate the feedback. And everyone, thank you for joining us for another Mortgage Leadership Outlook Broker Edition. Really, really appreciate our partner in this, PennyMac Broker Direct, for kicking butt out there and helping, Christian, just being the leader that he is in his marketplace, and just, of course, helping us actually connect with with brokers like Christian, so we can tell you their story. And listen, make sure if you're catching us for the first time, we've got a podcast. You can catch us on all the podcasting platforms. Please, make sure if you like us, make sure you give us a nice review. If you don't like us, just ignore us, please. But we really appreciate everyone. Have a great day. And Christian, thanks again.
Thanks, Andrew. Appreciate it.